Jim Simons, the founder of Renaissance Technologies, has died at the age of 86. That's according to a statement published by the Simons Foundation. His hedge fund is considered a pioneer of quantitative investing, and his technique was so successful that he became known as the Quant King. Let's discuss this with Bloomberg's Kathy Burton, who has covered much of the legacy of Jim Simons and Renaissance Technologies, of course. Tell us a little bit more about what people are saying today, what he's most remembered for.
Well, Jim is a pretty interesting character because not only was he an amazing hedge fund manager, and no one could ever figure out how he made so much money, but also he was a great mathematician and a great philanthropist as well.
Speak to a little bit more about his philanthropy, because a lot of people who think about Renaissance, and we can talk more about it in a minute, it was very well known that he was hiring people that were not your typical Wall Street bent. But what about his philanthropy?
He had a large foundation, and he helped fund other foundations for his family, for his children. And he gave a lot of money to education, to mathematics in particular, teach for a mathematics program to teach mathematics in grade schools, and also autism was something that he gave a lot of money to as well.
And he taught himself for a while as well.
Yes, he was a professor. He was head of the Stony Brook mathematics department and really brought it up to be a major mathematics department in the world.
Set up Rentech for us here, for those who don't know what Rentech was in the world of money management.
It was a quantitative fund, as you said, which means it uses computer models to trade. And it was really the first quantitative hedge fund. And it was also incredibly successful. It had one losing year in its, I think, second year of operation. And after that, it annualized at about 40% a year. And that continued even as more competitors came into the market, and it was cheaper to use computers, so people had more computer power, and yet he was able to always beat all his peers.
I believe he was kind of one of the earlier ones, wasn't he, to close off the fund to new investors?
Absolutely, because he realized early on that you couldn't make big returns if you had a lot of money. The trading costs were just too much of a burden. And so he capped it at about $10 billion. It would fluctuate a little, but $10 billion was about the level.
He also didn't have a traditional way into finance. He was a code breaker for the government.
That's correct. A job that did allow him to do a bunch of mathematical research while he was working for the government. And then he got fired from that job for writing a letter against the Vietnam War. And then started out at Stony Brook, but he decided he was interested in trading.